When it comes to trying to find the all-around best high-yielding ETFs for income generation, there's usually always some risks that are associated with it. But what if I told you there is a high-yielding ETF out there that has a trailing 12-month dividend yield of over 17%, pays a consistent monthly dividend, and has even crushed the S&P 500 on multiple time frames? Well, what I'm telling you is actually true. The Simplified Volatility Premium ETF, or ticker symbol SVOL, is a newer high-yield ETF that might be every income investor's dream. In this video, we're going to take a deep dive into SVOL and see if this ETF is actually worth the hype or if this ETF is just too good to be true. We're going to go through all this and more right after you please drop a like in this video and subscribe for more content like this. Now, when it comes to dividend investing, investors are always interested in higher yielding single name stocks and of course ETFs. But when it comes to higher yielding stocks and ETFs, investors can often find themselves stuck in a yield trap. Now, a yield trap refers to an investment that appears to have an attractive yield or dividend payout, but is actually accompanied by significant risks or unsustainable conditions. Now, investors can be lured into these types of investments because the investment is offering a very high yield. Something like SVOL, for example, is offering over a 17% trailing 12-month dividend yield, which for good reason definitely has a lot of our attention. But what's mostly important is to learn how to analyze an investment opportunity, and of course, this should go without saying, but an investor should never buy into something without understanding what the underlying investment is, just because it offers a high yield, for example. So ticker symbol SVOL, or the Simplified Volatility Premium ETF, is an exchange-traded fund launched and managed by Simplify Asset Management. Now, it invests in public equity and fixed income markets of the United States. Now, for the fund's equity portion, the fund invests directly in through derivatives and stocks of companies operating across diversified sectors. This fund also employs a short strategy and uses derivatives such as futures and options to create its portfolio. It invests in growth and value stocks of companies across diversified market capitalization. And the SVOL ETF aims to provide an attractive income stream and source of diversification while seeking to avoid risks inherent in other income-producing asset classes. Now, SVOL's short VIX positions, which is shorting the volatility index, provides investors an optimized exposure for monetizing the premium in the VIX futures markets. And on top of that, a modest option overlay budget is then deployed into VIX call options to help protect against an adverse move in the VIX. Since inception, the fund is down 13.21% as far as ETF price. But keep in mind, this fund pays a massive dividend, so total return is going to look quite different. The fund's 52-week range as of right now is $20.55 on the low and $23.68 on the high. Now, the fund does have a pretty hefty expense ratio, which is sort of more or less industry standard when you're dealing with a fund like this. But with an expense ratio of 0.66%, that's definitely going to add up over time. Now, the assets under management for SVOL is $266.05 million, so the fund is growing pretty rapidly. But now let's get into the good stuff. The trailing 12-month dividend yield for SVOL is 17.36%, which is incredible. Now, the dividends paid on a monthly basis, and if we look at the max chart for the dividend payouts, they've actually been very consistent so far. Even during a market where anything seems to be happening, the SVOL ETF has paid out a rather consistent 32-cent per share per month dividend for quite a while now. Now, on the other hand, something like JP Morgan's JEPI ETF, another high-yielding ETF that a lot of income investors love, their monthly paid dividend has been anything but consistent as of recently. There's been months where JEPI's paid 61 cents per share, and even months as of recent where JEPI's paid 37 cents per share. So I will say, as an income investor myself, it's pretty impressive that SVOL has been able to pay out a consistent dividend where income investors can sort of almost rely on at this point, at least for the time being. Now, what's maybe most crazy about the Simplified Volatility Premium ETF is the fact that its total return is actually extremely good. Now, if you look at price return, this is just the price of the ETF. The ETF is actually down in the last year 2.47%, where the S&P 500 is up 2.53%. But if we change the metrics to total return, this meaning that dividends are now included in the total return price, you can see that at 17% dividend yield definitely makes a difference. The total return on the 365-day time frame for SVOL is 16.24%. That is a massive total return, and a total return that's beat most other ETFs and tons of single name stocks over the same time frame. I mean, for example, the S&P 500's total return is 4.32% as far as share price plus dividends included. Now, unfortunately, when it comes to SVOL, we can't really look at all that many time frames because the ETF is pretty new. It's only been around for just about 2 years. But year to date, which is 149 days so far, SVOL has returned 10.64%, where the S&P 500 has returned 12.81%. So more or less, SVOL has stuck pretty close to the same total return as the S&P 500 on the 149-day time frame. This is pretty impressive, especially because in this time frame, we all can agree that the S&P 500 has had quite a bump and has been really moving nicely. But of course, the bigger question still remains, and this is the question that none of us know the answer to. On something like the 5-year time frame, how is SVOL going to perform? Is this going to be another one of those higher yielding ETFs that start off really good, but find themselves decaying over time? Maybe a perfect example of that is the QYLD Global NASDAQ 100 Covered Call ETF. Now, this is a super popular ETF with over $7.5 billion in assets under management. I'm sure if you're interested in a dividend investing or an income investor, you've definitely heard of it. Now, back when QYLD hit the scene, it seemed really promising with decent total returns because of the massive dividends. But over time, as you can see, QYLD has continued to decay no matter what the market really throws at it. And what's crazy is that even with QYLD's massive dividend of around 10% more or less, the total return over the past 5 years still has gotten absolutely crushed by what the S&P 500 has been able to return. The S&P has returned 70+%, where QYLD has only returned around 27.5%, and that's with dividends included. So in my opinion, is the Simplified Volatility Premium ETF SVOL a good high-yielding ETF that income investors should run to? In my opinion, something like SVOL would be fun to have as a small position in my overall portfolio. And this is simply because the strategy that the ETF employs, and because of course the ETF just doesn't have all that long of a track record yet. But regardless, this ETF is going to be a lot of fun as an income investor to watch over the up and coming months and years to see exactly what it turns into. But I want to hear what you guys think down below about SVOL. Is this something that you would add to your portfolio? Or is this yet again another long-term dividend trap? If you enjoyed this video, make sure to please drop a like on the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.